Hi, I'm Peter Rose, founder of Longwood Currency Trading. Surviving your Forex trade entry. That's a challenge. Most of the folks that contact me, and thank you for sending me emails, I appreciate that. It's great to communicate with you all that are trying to improve your Forex trading, because it is, to my mind, the best retail financial investment that we could do. And this is coming from someone who did 40 years of real estate. If you go to my website, longwoodcurrencytrading.com, on the currency trading page, there are 7 reasons that I list why Forex is the best financial investment that we as retail traders can participate in. And I think each one of those reasons are valid, and they should overshadow the negative things. And I try to, in this channel, present the negative things in a rational, reasonable light. And surviving your trade entry in a Forex position is one of the most difficult things that we need to overcome. And it seems to be one of the most mystical problems when people are in their discussions of what they're doing, and they're going, well, I've done this and I've been trading for 3 years and I use this kind of approach and blah, 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 but I can't seem to get consistent in my trading, and I've gone through, 3 many accounts or something, and I'm just not, you make it sound so simple. What am I doing wrong? Well, the simple answer to what are you doing wrong is you don't really understand the entry process, what I call entry analysis in the life cycle of a currency position, which is a rip that I made. I was a software engineer for 33 years, and we use a software development life cycle, a process of solving complex software applications, whether they're systems or business. I did solve complex business applications, back office type business applications, internet-based enterprise applications that are very complicated. It's not like writing a membership system where you take somebody's membership and you process them through. These were very complex problems. And if you didn't have a methodology that was logical to go through breaking that problem down and solving the pieces, you'd never get through. You'd have what we call in software engineering spaghetti code. Those software development life cycles, and there's several of them as far as methodologies. There's agile methodology and waterfall methodology and all this stuff, but they still use the software development life cycle as a process to guide the software engineer through the problem solution. And so when I'm working with someone, I have a course. Fast Track course is my primary vehicle for working with people. The first thing we talk about is, well, what's the problem we're trying to solve, and how do you break that problem up into reasonable chunks that are easier to solve? And so the life cycle of a currency position is entry analysis, position management, and exit methodology. Pretty simple. The solutions to those, you could say, well, that's pretty complicated because I've been trading for 3 years and I can't get out of this failure. I'm struggling. I can't get consistent. I'm not making the money that I need to make. I'm trying to significantly impact the income that I'm making from my job, so that if I lose my job, and so many people in today's world, this is 2025, we're mid-March of 2025, and if you look back in time, if you're watching this video 5 years from now, this was a tumultuous time, not only for the United States, but all over the world from a financial standpoint, and that directly impacting the employment situation. And so a lot of the people that I'm talking with are afraid of what is going to happen. And a lot of the people that I don't talk to that are 50 years old and above, and I should be talking to them, and hopefully you guys are watching this channel because I'm 75 years old, so I've been around the bus before, and the problem solutions that I would provide for you at 50 years old or 60 years old would be different than the way I might approach how a 24-year-old would solve the issue. But regardless of the way that I would go about talking with you, because I don't just give a PDF file, I personally consult with you. That's what the training is about. You read a section of the course, and then we talk about it. Man, that's the only way it works. You don't go to college to take a advanced trigonometry course, or let's make it simple. Take a history course and they hand you the book and say, come back at the end of the semester and we'll give you the test. The teacher is there to answer questions in real time because everybody's question is a little bit different. It's slanted a little bit different way. And it's challenging for the teacher. And you can have bad teachers that just don't know how to teach. I've been teaching martial arts for over 50 years. I understand teaching important stuff, and the way that it's being done in the financial markets is not the way it should be done. It's just not good educational process. But I digress. Surviving your Forex trade entry. If you don't get your entry right, then you can't expect that position management, that you're not going to have a position to manage, and you're not going to have any exit methodology problems because you don't have a position. So notice that those problems are in sequential order. You don't solve exit methodology before you solve entry analysis. So if you're not consistent, what does that mean? It means that you're getting stopped out, or you're involved in position management, but you don't know the difference between entry analysis and position management, because position management, the solution of the position management, because entry analysis solves the problems of position management so that you then manage the position. You don't have a problem to solve in position management. That's what makes it simple. I start talking with somebody about this stuff. We could talk about it in videos and stuff, and you go, yeah. But when I actually talk to you live about the process and what's involved, you go, it can't be that simple. I go, well, yeah, it is. It really is. Because if you don't know the relevant information to focus on, to apply to the relevant problem that's there for you to solve before you can solve the next problem, you're going to get jammed up. So how do you survive your Forex trade entry? I just did a video on the failure of that trade entry process, or the entry process is either because your stop is too short or you don't understand entry analysis. And we eliminated the problem with the stop. We don't even talk about the stop. If I'm working with someone, I put them on a short stop so that they fail a lot on a $1,000 account, trading a one mini lot at $1 a pip. And then I guide you and say, why did you do that? Why did you do that? Why did you do that? That's not consistent with what the course manual says. And they go, well, I thought that, no, you don't think. This is what you do. And then they go through the thing, and I just had a student the other day, Solomon, hi, how you doing? He had 4 losses in a row. He's just kind of getting started. Live account, $1 a pip. And so the question to him was, well, I hope that your 4 losses was $32 or at the most $40 because he short stop 8, 10 pips, something like that. If it's more than that, then you're not following the rule. And so you get penalty points for that, other than just losing $40, which is in the United States, a couple of pizzas. You don't want to do that. You want to be losing pizzas. So it's not the stop issue. You have to get that out of your head. Granted, if you don't know what you're doing and you set your stop out 20 pips, you're going to lose a lot of money. Better that you lose a lot of money at 8 pips and learn from that, so you don't chew through your bank account and either have to reload because you're close to margin, or you run that fucker right to the ground. You have the first thing that you're considering doing is hitting bid ask, right? That's called entry analysis, or that's called your entry. So how do you survive your entry? When you hit bid ask, you've obviously made some kind of a decision, right? So what is the decision? When the trade doesn't work out and you hit your stop, it should be fairly quickly, because if you're wrong and you should get out quickly. Why were you wrong? And most of the time, as I indicated several videos ago, that you're doing anticipatory trades. You're saying, oh, I've got this characteristic and the market looks good and the Bollinger Band and the RSI and all whatever other shit that you're using, which I don't use or even talk about in my training. You have a couple of moving average lines just to get the drift of the market, but that's it. Why complicate your life? And besides, if you want to go into the mathematics of Bollinger Bands and stuff like that, I'll show you where they fail and what the problem is with them. When you are hitting bid ask, you've obviously made a decision. You didn't just get up in the morning and turn the trading platform and go, holy shit, let's get in it, let's go trade. You had a reason for that. So when the trade fails, are you taking the correct steps to look at what happened with that trade? Or are you just saying, well, that's badass luck, or I don't know what I'm done with, whatever other thing that you're putting in your head. There's a reason that you lost. And more often than not, it's going to be that you are sitting there with your price action at a certain level, and you're saying, this has whatever I think that it needs to have in order to go perhaps 20 or 30 pips. We're trading, as day traders, we're trading down on the 5-minute time frame. We're doing some of our analysis on the daily and the 4-hour charts, coming down onto maybe the hourly to see what's happened in the last, maybe 14 hours or something like that. What's the economic sentiment, you get from that. But when you actually start setting up your trade, you're down on the 15-minute chart, setting up your take points, your pending order points, it stops and all that other kind of stuff. And then when you hit bid ask, you're down on the 5-minute chart, managing that trade. So when you're down on that 5-minute time frame, you've got 12 decisions an hour that you can make as to what you want to do. Or if you're watching price action, if you set you're trying to set up on the 15-minute where your access points are and all that stuff, you might be down on the 5-minute time frame looking at what price action is doing in those shorter movements to gauge if that price has a reasonable probability of moving in the direction that you think that it should move in. So you have 12 decision opportunities an hour, and you're all working, you all have a job for the most part. Some of you are in college or whatever that I'm talking with, and I don't make much sense to you because you don't get simple stuff. College teaches you how to learn complicated stuff, and so you can't be bothered with simple stuff. But I'll tell you what, I talk to the 30 and 40-year-olds that are out there, and they're in a position where they have enough money to risk big money so they can make big money. I mean, you're not going to change your job income by trading a mini lot or maybe even 2 full lots. You need to be up around 3 to 5 full lots in order to significantly impact your job income. On 5 full lots, you can really significantly impact it, if not change it. And I'm not talking about trading 5 full lots at 200 to 1 leverage. You're dealing with fire. When you learn how to, if you're high leverage, anything over 100 to 1, 200 to 1, 500 to 1, I don't care what your broker offers you, don't take it. If you're learning to drive a car for the first time, think about this. You're learning to drive a car for the first time, and you're in the car and you're driving along, and you get onto the highway, and all of a sudden you just step on the gas, and now you're going 70 miles an hour. What do you think your chances of survival are? Not very good. So what makes you think that you can trade at 200 to 1 and survive? That's ludicrous. Oh, but Peter, I can't make any money like you do at 10 to 1. if I'm going to trade one full lot, I have $10,000. But that gives me $6,000 for margin and $4,000 for runway. So I can make 400 errors. That's $4,000. Am I going to make 400 errors in a row? No. Well, why do I have so much margin? So I'm relaxed. I don't have to worry. And I have that margin to do something with later, but not at entry. If you're over leveraged at entry, you're going to get slammed. So your purpose in learning the trading, or the original process, is trade for $1 a pip until you learn how to do stuff in the proper order, and you get comfortable with trading and making $3 a day or $8 a day or something like that. By the way, that's 3 to 8 pips. If you want to get greedy and you want to try to make 20 pips, go right at it. Do you have the experience to do that? You don't. Well, why do we set 20 pip profit targets then? We set those profit targets for very specific reasons, and I teach those reasons in the course. And the person that I'm working with or talking with at the time they go, oh, that makes a lot of sense. Well, of course it makes a lot of sense, because they've had the training that came before it. What's the problem? How do you solve the problem? What are the tools that we use to solve those problems? And this is how long it takes to do each piece. And so if you're trying to survive your FOREX entry, that's the entry analysis stage of the life cycle of a currency position. It's a whole stage. Now, I have one rule with 4 conditions that are also sequential that solve entry analysis. I have one rule for position management. I have one rule for exit methodology. But the entry analysis is the most important because it sets the foundation for position management and exit methodology. If you don't understand that, all you're doing is hitting bid ask with the idea that price should go in that direction because it's been going in that direction before. Isn't that really what you're doing? Or you're using a Bollinger Band to bounce off one of the edges of the envelope? but really, that's great. And that's what an experienced trader can do. You can't do that. If you have less than a couple of years and maybe 300 or 400 trades, and how are you going to get 300, 400 trades if you're a long-term position trader? You're not. But I make probably, let's see, last year, 2024, I made 1,000 trades, and I had, I think, 400 positions or something. I made a lot of preparatory trades. I'd go in with a couple of lots, and I'd go out, hit stop, and I'd go in with a couple of lots again, and that would go up, and I'd add a lot, and then it'd start to go in against me, and I'd get out. So I had a lot of trades that made up the positions. So I had 1,000 trades, but I had 450 or something positions. So, that's 2 a day. 200 trading days a year, you get two trades a day. And if you're down on a 5-minute chart with 12 trading opportunities or decision points an hour, and you have to get to work, you've got 2 hours in the morning or 2 hours at night that you can trade some currency pair, the majors, hopefully. You're trading crosses or exotics, you're wasting your time, just like you're wasting your time with leverage. I mean, this is helpful information I'm trying to provide for you. We've already lost all the entertainment people that are looking for that. So thank you for staying this far into the video. I hope you continue to stay there. And you say, oh, all this guy does is talk and talk and talk, and he says the same thing over and over again. I have people make those comments on my tape. No shit, Frank. I do say the same thing. Guess what? It's important. And I do talk because that's education. It's up to you to do the work to solve the problems that I'm presenting the solutions for so that you can learn how to do that. Well, how do I do that? Because you're not teaching us how to do that. Sure, I'll teach you how to do it, but you have to take a course. You expect me to be able to do that in a video? I can't do that in a video. Fast track is 6 weeks, and you're there. Oh, man. And it's simple. Takes some work because you're working for 6 weeks, But after that, you know the skill. It's like driving a car. You got to drive that car a lot in the beginning. And there's a lot to think about. But once you go for a couple of weeks, oh, I got this. I got to make a left-hand turn. Psh, I got to make the left-hand turn. I'm not going to worry about the kid with the basketball. He's not there, or oncoming cars. I know the rules, and I'm comfortable with that. I can even listen to the radio or carry on a conversation. And that's the point that I try to get folks to. Even the experienced traders come in. We start over again, and we build this foundation, and they go, it makes great sense. Why would I do what I was doing before? But because you didn't know any different. So surviving your Forex trade entry is the most critical thing that you can study and learn. And I'd love to help you in a video, but that's impossible. All I can do is tell you the what to do. But how you do that and when you do it, which is more important, that's something that we're going to have to talk about. Maybe I can help you through email. If you send me an email, we can talk about that. If you decide that you need more information and you'd like to chat with me on a video chat, I'd be happy to do that for no charge. I mean, I'm retired. I don't need your money for the consulting, and the consulting is expensive because you get me. So if I can help you in a video chat, 15 minutes or a half-hour video chat, and get you to say, oh, I didn't think about that, or let me try it that way, that's great. Yeah, I'd love to help you out. But if you're lost in all the information and all the scramble that's out there, then we're going to have to start over. We're going to have to build you a solid foundation, and then you'll have to get involved in a course, or maybe you just want to do some consulting or whatever. But I think the course is the way to go. That's just my opinion. I'm the guy selling the course. So, but Again, I don't sell the course. I have nothing to sell. If someone talks with me on the phone and they like what I say and they feel that the process that I lay out is good, then they're going to purchase a course and consulting from me. But I don't sell anything. People purchase stuff from me. You can believe that or not. You have all these guys out there selling courses for $1,000 or $2,000 or $500, and all they're concerned about is getting you into a Teachable class or Udemy class and grinding through some PDF file or fancy website online course program. And that's fine if you're doing beginner stuff, but you're not going to replace your job income by learning how to take a small account and make it a big account, because you're not going to take that big account then and make that a bigger account, because the rules are different. Why do you see these guys taking these small accounts and they take a $500 and they run it to $2,000 or $3,000, and then they bank the $3,000 and they start over with $500, and then they run that back up? Because if you try to move this stuff up into $20,000 or $30,000 account sizes so that you're trading a lot of multiple lots, you get wiped out because you've learned the wrong way. And if you're thinking that you're going to trade on your own after going into a prop firm, first of all, you're not even going to get through the prop firm. You have an 80% chance you're not going to make it through the test or be successful within the prop firm, because again, you're trading to prop firm rules, not to currency market rules. And the reason you're doing that is because the prop firm is taking the other side of your trade all the way through, and you have no control over the amount of money that you can bring to bear other than your challenge amount that you have. Everything is geared up against you unless you step back and look at this stuff for yourself. And you've got to focus on that entry analysis. And you've got to look at what you're doing. Trade a mini lot in a live account. Don't tell me what you can do in demo. I traded in demo for 5 or 6 years. There were times when I was making 15% a month for 6 months in a row. And then I'd lose, maybe 8% some month, and I'd get back together, and then off I'd go. I was a hero. I was making 150% a year over the lifetime in the demo. And then when I really put a big account at risk, $45,000, I started studying the currency markets in 2007, and for academic reasons. And then, as I've said many times, I didn't really trade a large account. I traded a couple of small mini accounts in 2012. So I went 2007 to 2012 studying and doing simulation stuff, lost $4,000 trading too many accounts. thought I needed more education. And then I didn't trade again until 2017 when I opened a $45,000 account and lost $40,000 really quick. And that's after trading demo for four years. I think I had 4 or 5 years of demo trading or running simulations against the demo market pricing and stuff. The education just doesn't work. So what did it for me? Oh, like I said, I've been a software engineer for 33 years. So I stepped back from the problem and looked at it differently. And I was solving the wrong problem. I took my remaining $5,000 and just about doubled that in, it was 4.5 months. I think I was within $200 of doubling it in 4.5 months. I added $10,000 more to the account, traded that for a while, had confidence, added $50,000 more to the account, and away we went. So, and I've had big losses since then, but that's all part of the game, winning and losing, right? But the main question is, you don't get anywhere and you don't do anything and you don't learn anything the right way or how to trade unless you can survive your Forex entry. If you keep failing in entry, there's a thing called a win-to-loss ratio, right? How many times do you win for how many times that you lose in as a percentage. So you lose 40 times, 40% of the time, and you win 60% of the time, whatever those numbers are that add up to 100%. So you're losing you're winning 40% of the time and you're losing 60% of the time. You have to ask yourself, why is that happening? Why is my win-to-loss ratio upside down? Why am I losing 6 times and only winning 4 times? Well, it's because of your entry. The entry has got to be wrong. Why is it wrong? So let's, send me an email and we'll get into a dialogue and I'll show you where these things are. And then if you can look at that on your own and solve the problem on your own, that's great. But if you can't, I have the solution for you. And I can work with you to the point and show you how in an organized educational process that you can learn this stuff, no matter what your background. In fact, I have the most problem with engineers and smart people because they want to figure things out. There's nothing to figure out. You look at the problem and you go, well, this is what needs to be done to solve that problem. But if you don't know what problem you're trying to solve, you can't. It's very difficult. And a smart person looks at the problem and look, I'm very smart. I am smart. And so I looked at these problems and I manifested all kinds of solutions of complexity and all that stuff. And that losing $40,000 woke me up. I looked at it again and I go, whoa, wait a minute. I'm solving the wrong problem. And the problem that I really need to solve is 3 problems. And boop, here's this thing called entry analysis. Let me solve that. Oh, I can do that in 1 rule and 4 conditions. It really is that simple. We're our own worst enemy. So if you're having problems with your entry, you shouldn't be losing any money after your entry and price is going in your favor, right? I mean, that doesn't really make any sense. So you're losing because you don't understand entry analysis. You're not being consistent in your trading in a profitable sense because you don't understand entry analysis. So let me help you with that. Take a look at more of my videos. I've got over 500 videos that I've done, and I talk about this stuff constantly. And yes, I do repeat myself, but there's a reason for that. Some people are just joining the channel for the first time. Thank you for joining the channel and watching for this amount of time. I hope you watch more of the videos and subscribe and all that other sort of stuff. I don't have a large subscriber base. I don't have a large viewing audience for the 5 years that I've been putting these videos up because 90% of the people that are looking for Forex information drop off within 30 seconds of watching my video because they're not entertained. They're not being given the magic secret sauce. So those people are going to go on and they're going to trade somebody else's system and they're going to jump to crypto or whatever they're going to do, and 90% chance against them that they're going to lose. When if they stay with something like this, which is educationally sound, maybe they have a better way of understanding what it is that they're trying to do, and you could solve it on your own. If you can't, then you need a course. I mean, that's just it. You want to learn how to do second order differential equations? You're not going to do that on your own. You need somebody to teach it to you. I'm sorry. If you want to be an engineer, you're going to have to learn that. And if you don't want to learn it, or you learn it the wrong way, you're not going to get a job as an engineer. You're not going to get a job as a doctor if you don't know how to dissect dead bodies and memorize complex formula for organic compounds and stuffs of medicine. That's just the way it is. The more valuable something is, the more you're going to need someone to be by your side to help you. So look at this entry that you're doing. It isn't just hitting the bid-ask button and hoping that it's going to go in your direction. There's a process of understanding price action and order flow that will assist you in arriving at a larger probabilistic view of what that price will do. And that will bring you to the point where you can flip your 40-60 to 60-40, 60 wins and 40 losses, or 60% wins and 40% losses. And once you get consistent at that level, and that's the goal for the fast track course, is to get you 60-40, then you can start doing really neat advanced stuff that will give you far more buying power for your dollars, and increasing the amount of money that you can make on a per trade basis, and reducing the amount of money that you lose when you do lose. And finally, when you get up and you're trading 70-30 as an all-in, all-out trader, now you can start staging, and that changes your win-to-loss ratio, and those metrics then start to fall away as important, because now you know how to trade, and you go to the next level of education and learning. That's the steps that we go through, guys, and that's just what we have to do. I hope I can help you out. Like I said, be very careful in how you evaluate those losing trades, because they're probably due to you going in too soon to the trade, and it's going against you too far. If you wait a while, yes, you lose 10 pips or something waiting for the price to prove itself out, but you're not anticipating what it could do. You're waiting for it to start doing that, and then you get in. And now, instead of having a 20 pip clearance to where you're at, maybe you have a 10 pip clearance. Great. You get a good momentum push, and you get 8 pips on that trade. What's wrong with that? That's 0.8%. You do the math, trading 3 times a week for the 52 weeks a year at 0.8, and you figure out what kind of percent return you can get on your bank, and you will be amazed. Peter Rose, Longwood Currency Trading. Have a great day, and have a great trading day.